As we concluded in our fundamental analysis section yesterday, if your portfolio is in the red, use it as an opportunity to enlarge your stake or take a break. The technology hasn't changed and there will be no major bans. We will recover and come back even stronger. You know, there's even a website which documents Bitcoin obituaries that tracks the number of times people have declared Bitcoin is dead. To recap and conclude last week's news about a possible South Korean cryptocurrency exchange ban, the South Korean president confirmed there will be no ban of cryptocurrencies or exchanges. Overall, this pullback that we've seen so far is relatively mild. In 2014, we saw Bitcoin fall 80% from its highest, only to recover to fresh new highs over the last year. Do we think this is the beginning of 3 years of sideways movement like last time? In a word, no. Here's what's changed. Bitcoin from 2009 until about 2016 was in the very first section of the innovator space of the technology adoption curve. It was fighting for its life to gain any mainstream notice. What it got was Silk Road and Mt. Gox, two events which should have killed Bitcoin and cryptocurrency as a whole if it weren't for the technology being unique and, more importantly, an improvement over existing solutions. 2017 saw Bitcoin and cryptocurrency move outside of the innovator section and into the early adopter section. This was largely due to the massive increase in cryptocurrencies that have taken the foundation that Bitcoin built and improved upon it, the altcoins. At the end of 2017, with mainstream acceptance on the horizon, cryptocurrency is at its greatest challenge yet, what is known as the chasm. It's what separates cryptocurrencies from Teslas. This is the make or break moment, and we believe crypto has what it takes. So I think one of the things that's happened here is that we've had a lot of speculation and build up with the launch of futures products and derivative products in the US. These are the harbingers of institutionalization of crypto, and so a new flow of capital would push valuations upward. A lot of people moved into Bitcoin leading up to the launch of those futures. When that happened, a lot of other people sold the news. Everybody loves an unregulated market until it acts like an unregulated market. This is a brand new market. These are brand new products for a brand new asset class. So most of these large professional managers are going to take their time evaluating products and the opportunity before they make a move on cryptocurrency. In summary, cryptocurrency is not dead. Bitcoin is not dead. Market corrections such as these are necessary to test the validity of the investment and the investor. In addition to the news from yesterday, we've seen the largest fraudulent coin, BitConnect, shutter their trade and lending platform, effectively erasing 2 billion of their users' investments. And we sincerely hope that you are not affected. We strongly recommend you stay away from lending platforms that have guaranteed returns in the future. And now I'll turn it over to Doc.
Hi, this is Doc for Ready Set Crypto. Well, it sure is a lot more fun to cover a market that's making everyone a lot of money. So this is where I'll lay down one of my all-time important sayings in trading. It's not what you make, it's what you get to keep that counts. Making money is relatively easy in a bull market. It's keeping it that's hard, because when you're the most confident and aggressive is precisely when you should be the most defensive. See what I mean? Those attitudes don't come naturally to us. And this is why the whole business of trading is hard. Like following Warren Buffett's advice of being greedy when others are fearful. It's one thing to write that down and repeat it to others in a club meeting. Hey everybody, Warren Buffett says to be greedy when others are fearful and fearful when others are greedy. Yeah, but somehow your brain short circuits when it actually comes to following that advice. Like today. Did anybody really buy the dip today? Well, somebody did, but chances are it wasn't the average retail trader. And those that go around wearing HODL t-shirts were probably curled up in the fetal position today, trying not to look at their portfolios. Bear markets are not easy, and this is why we use charts to add a shred of objectivity to the process. Okay, so now let's do some analysis on the top 10 coins. I'm going to use concepts today like bottoming candlesticks, volume peaks, fractal timeframes, and change of polarity. I hope that you begin to speak the same language if you're a chart nerd like me who stares at price movement all day long. Let's get started. First up in the top 10, no surprise, is Bitcoin. And Bitcoin today is trying to hold its closing price right at that 61.8% fib that we talked about yesterday. It's also bottomed out around the low watermark here at very close to this ascending trend line and the confluence of $10,000. So what you typically will find is on a breakout at a very important level like this was right there at about $8,000 that many times we'll see, especially if we go parabolic like this. We'll see a retest from above before finally bouncing from here. Now, I'm going to have more to say about this in just a minute, but I want to quickly go through the top 10 here and give a high-level read before we start to drill into some of the actual techniques that we're going to look for here. But one word here is that this candle is looking pretty good. It's good when we have a nice long bottoming tail to this. Speaking of that, actually the better candlestick and the better chart pattern here is Ethereum. Ethereum is much stronger right now than Bitcoin is. And we've seen a couple of technical things here on this chart that make me very happy when it comes to Ethereum. So first of all, what we're seeing is a very strong swing test. So we talked about swing tests the other day, and this is where we're going to see swing tests like this. And a swing test at a confluence of support, which is this trend line, as well as the 61.8% fib, all that coming into play. And you can see how well that it has rebounded, rocketed off of there. So it's very close to forming what's called a hammer candlestick. Now, a hammer candlestick is where you're going to have a very small real body and a very long tail to this, a very long tail which probes way down here and then comes screaming back up. And it normally shows on relatively big volume. This is not exactly big volume today. Certainly not what we consider when we go against things, you know, bottoming formations like this one was. This one's a little bit light, and that makes me a little bit suspect that we might see something like this happening, where it bounces up to a lower high and rolls over again and forms a more complex test. So be aware of that in the near future. Next up is Ripple, or more affectionately called Cripple these days. So Ripple is it's still holding right now. It's still holding above this breakout, which is right around 86 cents or so. So it's gone through a major swing test, and we'll see whether or not it actually ends up closing today above that 61.8% retracement. Yesterday it did not, so that was a failure of not only the Bollinger Band, which you can see here in pink, but also the 61.8% retracement. So the other thing that I don't like to see on Ripple, it's an old habit, sorry, is that we do actually have a lower high here. So there is a form of lower hit. It did try to bounce at one point, so it's going to take a lot more work to get this thing to actually reverse and head back up. So of all the coins I've looked at recently over the last couple of days, Ripple is probably in just about the worst shape of any of the ones that we've looked at. Okay, Bitcoin Cash. What I don't like about this one is that it's losing the 61.8% fib, and it's also lost this trend line. So Bitcoin Cash had a lot of momentum going beyond it. It was in a really nice consolidation pattern here, broke to the downside from here. But right now we've seen a couple of technical failures. So also the swing test here, which is right around this level here at 1758 or so, is right now failing that swing test. We should see this almost come down. Remember, look at Ethereum. Look at how Ethereum came down to the swing test, and it's almost as if it touched a hot pot with its fingers. That's the kind of reaction, that supply-demand imbalance that occurred at that point. And this is why charts are so illustrative for these kind of things, because you can see that type of reaction just in the candlesticks. So as we get down to Bitcoin Cash, no, that's not happening. There was no big swamp of demand coming in as the swing test hit. Okay, the next one here is Cardano, and I'm not going to spend any time on this one because there's just not enough history to really speak to any kind of patterns here. You can see that there was sort of a formation of a triangle in here that it broke to the downside like everything else did. And it is recovering off the bottom, but there's really no history for us to look at. So now we'll get to Litecoin. Litecoin is actually not in that bad a shape. Not that bad of a shape. So yeah, it's still trying to hang out around the 61.8% fib, but it does look like the trend line, however so slight, has survived from that. Now what I don't like about Litecoin is this is a fairly complex lower high setting up here, which means that it might also take more work for this thing to actually reverse and start heading higher again. So this is another way of saying that this is already reversed to the downside. This thing is stuck in reverse now, and as for those of you that drive, you know that you can't just immediately flip it into drive if you're backing up. So this may take a bit more complex reversing before it actually does reverse at that point. Here's NEO. So NEO is sneaking up here into the top 10. And I have a little bit more about this in the altcoin section of the written part of the report. But NEO by far today is the rock star of recovery. Look at these long-legged, this is a tweezer bottom. So imagine that you had a pair of tweezers and you put them upside down with the tips pointing down. This is exactly what this looks like. So yesterday what happened was they pushed NEO down, they destroyed it, and somebody came screaming in as it stopped below 100 and bought it up. And then today the same thing happened again. Oh yeah? Well, I'll show you. And it goes screaming down here to retest that level again, and they step right in and buy it up again. Who's winning that battle? This is what's showing you here on the chart is right now the bulls are winning the battle on NEO. So NEO by far today is the rock star of the top 10 in terms of survivability of the bear. Here's NEM. NEM is actually doing okay. I mean, it doesn't chart all that well, and there is a complex lower high setting up here. So again, it may take a little bit more work to get this one to reverse. And it's sort of sloppily holding the ascending trend line here. Some pretty deep tests. This is almost a tweezer bottom as well too on NEM. And then we get to Stellar, and this one as well is kind of looking at the same thing. There's a complex lower high here. This one may take some more work to come up. Nice tweezer bottoms here. Not quite to the extent that NEO is, obviously, but a retest of the Bollinger Bands down here. Retest of the breakout. So this is a swing test here. Could be worse. I mean, we could actually see this thing falling way below the swing test. That would be bad news. So far this is just a deep test. And I'll finish out the top 10 by IoT. This is a difficult chart to read because it's not showing a whole lot of structure. There's not a lot of trend here. So it had an initial strong move up. It's been going sideways ever since. No real pattern here, almost a diamond pattern as well too. So again, I'm a little less bullish on this one just because it's such a complex, ugly pattern. When you compare this versus a NEO, I think that you can see that there's a clear difference in terms of the trend strength of something like a NEO, which is just explosive, versus something like this at IoT, which is just sort of moseying it along. I mean, there's no real explosion here off of the bottom. Yes, there is demand. We do have some small tweezer bottoms here, but you can see that this is not exactly the same thing. Okay, in yesterday's video, I showed you a technique for trying to identify the bottoms of these movements, and it's very difficult to do. Very honestly, it's really not worth trying to pick a bottom. There's no point in being a hero and trying to get the bottom. This is called the old catching the falling knife routine. You end up with cut fingers. But what you can do is you can go down in a smaller time frame. So usually some division of the daily chart, usually I break charts up into factors of 5 on this, but you can go down to something like a 5-minute chart if you want to, or maybe even a 10 or 15-minute chart if you want a slightly different view of something like this, right? And what you're going to look for is reversals. So what you're looking for is, as we're looking at a 15-minute chart here, all of these are lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And also what you're seeing is the volume increasing on the bottom. That is a big tell right there. It's a big tell where we're getting these volume peaks into here. This is a particularly big volume peak. But what's different about this bottom down here, which occurred, and this was not that long ago, this is a couple of hours ago, is that all of a sudden the big volume peak here, and then what occurs is that you start to see this with a higher low and a higher high. This is how charts reverse, and this is the beginning of perhaps a change in polarity back up to the upside. Now, as we go out to the daily chart, is this an uptrend? No, it's not an uptrend. It's an uptrend on a 15-minute chart, but not an uptrend on a daily chart yet. So this is the beginning, perhaps, of a change in polarity. Remember, I talked about yesterday, reversals start from smaller time frames. So what's going to happen here is that we're going to have to see this thing bounce, come back up. This will probably be some type of a complex bottom here where a higher low is printed to make everybody feel like it's just going to roll over again. Remember, you almost need maximum disappointment at the bottom to truly create a printable low. And as the dip gets bought, as those shorts get baked to the upside, this is when we're going to get that screaming move to the upside, if this is meant to be. I don't know if it's going to go higher from here. For all I know, this could come up here and we could start to see something go down like this. This is why you need to be open to what happens regardless. Let price show you the way that the market wants to go, and don't impress your own desires upon what the price is doing. Okay, guys, I'm out of time for today, so thanks for listening, and we'll see you tomorrow. Take care.